Hello. In last class, we learnt about one business tool, Porter 5 Forces. You learned that with the help of this tool, you could understand the competitiveness of a business for its profitability. Now, we have another business tool, or you can say framework also, which will help you understand the company's market position internally and externally both. Well, what do I mean by internal and external factors here? Let's understand the same by SWOT analysis. So, before we go further and try to learn in detail what exactly is SWOT analysis, let's understand why should we know SWOT analysis. Well, we should know SWOT analysis because companies brainstorm on these metrics to understand their own positioning internally and externally both in a competitive world. So when companies does it, their management does it, it is important for you to understand their strategies so that every time their management is coming and giving a management commentary on the business, you are able to grasp it. So yes, this is a business tool, management tool where management sit and think about their position or the position of their business in the market. So how they will understand their position? They will try to see that what are the strengths they have developed over a period of time. Strength could be anything. Strength could be just a brand recognition. They know that they have a loyal customer base of 5 lakh people who will keep on buying products from them because they have been buying it. And this is one strength they have, and they may think about launching a new product altogether. So you know that they are ready. They are ready to do something based on their strength. Similarly, they know that right now they are selling their products in North India. Now they want to go and sell into South India as well. And they know that this is one opportunity. And their next business expansion plan could be on this. So a management always brainstorm on it, point it down, note it down, and then accordingly take action. And it is their responsibility to share these plans also with the stakeholders, with the shareholders. So only when you know this framework, the framework on which most of the management in many of the companies take business decisions, it will help you cross check these companies as well. So that is why it is important. You may not be doing the SWOT analysis for the company. You are outside of the company as a shareholder. You are doing a stock market course. All you are going to do is analyze different companies, different stocks, different shares, different organizations. But when you want to analyze them, you want to analyze their strategies, their positioning, their competitiveness. So competitiveness based one business tool you learned, you are aware. Now you have to be wiser with SWOT, which will also help you pick up good companies and help you understand the strategies being pitched by these companies also, right? So now that I have told you about strength and probably the opportunity part, and as the name suggests, SWOT, it stands for strength, weakness, opportunity, and threat. Now, what could be strength, weakness, opportunity, and threat in a business scenario? So people do SWOT for themselves as well. I can do a SWOT for myself. Okay, let me do a SWOT on myself. My strength is I'm analytical. I got 15 years of experience. I have good at I'm good at mathematics. I'm good at numbers. I'm good at programming. Okay, what are my weaknesses? Okay, I come from a very humble family background. I studied in government school. My pronunciation is still not well in English. I must improvise on it. This could be my weakness, right? And I have to work on it. Okay, I may start from 0 and I have to target for 10 and 50 and then 100, right? So one person can do the SWOT analysis for themselves as well, and they can cross check companies on SWOT analysis factors to identify a good company to basically invest into. So let's see what though the name suggests, I have just noted down some points here. So the point with strength is, so on what factor company separate itself from other players? That's when you call it a strength. It has to be relative as well. So factors where they have an excellent track record, you know that companies work with the track record, and the strength is something you don't develop overnight. It comes with a lot of hard work, patience, and giving a lot of time also into developing these strengths. So these are those factors. So why I'm writing it, because then when we are going to expand these factors, we will see that within the businesses those factors mean something. Now, what is weakness in terms of company? So area of improvement for the organization, factors which work as hindrance in giving best output on the employed resources. In a company, so many resources are employed, people are employed, money is employed, and technology and so many other things. But then even after employing so much of resources, at the same rate one company is not generating profit what the other companies are doing. Why it is happening? Must be because these companies are having certain weaknesses and they are working on it, and they should be working on it, right? And it is when you go and start doing actually fundamental analysis, you'll come to know that these weaknesses and the strength are quite open in the public. The only thing is you have to bring them on a paper before investing into companies. Well, I'm not jumping there and want to just focus on SWOT here, and I want you to remember these things as well. So what is opportunity? So any organization should be always ready to venture out and expand themselves every time they find a scope for horizontal and vertical growth. So opportunities are opportunities. Some Most of the people says that opportunity is all about timing. If you are, or success is all about timing. Certain opportunity come at certain time, and you have to be very much prepared to grab that, right? So opportunities will be always there for the expansion. This could be a very, very horizontal growth, means you can go and expand in multiple geography. You can think about targeting more customers from different geography. Within the customers, existing customers, till now you are selling them 10 products, you can think about selling them 13 product, launching 3 new product lines. So the opportunities are always there, and the organization should be ready to grab the opportunity. And when you will hear about the management commentary, they will always talk about this. Then threats. Well, threats which can harm business in short term, long term, or even permanently. And one organization should have the readiness to handle the crisis, because there will be so many crises which will come in the business. Some are predictable, some will be kept even in the category of unpredictability, right? But then threats will be always there. A new strong competitor can come and launch products at much cheaper price than you. That could be one of the threat. Natural calamity could be one of the threat. So anyway, I have listed them out, and let's understand that. But before that, since I have used the word internal and external, all I want to tell you that strength and weakness are your internal factors. Try to visualize and imagine it. Strengths is all about your strength. Weakness, it is your weakness. Where is the opportunity? Opportunity is outside you. You cannot create opportunity within you. You have to sell products. You have to give your services to the market. So the opportunities and threat will always come from outside. So it's a very, very wholesome approach to look at the business, or look at any kind of analysis where you want to identify these factors, right? Now, what could be a company's strength? Strong brand recall. So this company is 20-year-old, have never cheated its customer, and people have seen their logo for 100 times, 1,000 times, lakh times. Now they want to launch a new product. People may want to try. So the brand recall. Skilled workforce. Companies are run by people. People should be skillful enough, skilled with latest technology, skilled enough to handle crisis, skilled enough to upskill them altogether. They're always ready to learn new things. Capable top management, people who have worked in similar line of businesses and proven themselves. That could be one of the strength for any company. Patent, intellectual property. So you have a innovation cell, you invented something, you found something, and you got intellectual property rights with your company. Now, for certain years, certain numbers of years, you will be the only guy who will be probably capitalizing on that intellectual property. Nobody can infringe that. So that will be one of your strength. Scalable business model. So you have such business model that very quickly you can scale. The scalability is not the hindrance. Now, loyal customer base. You have a large, so strong brand recall and loyal customer base can have an overlapping here, but you can separately learn it also and separately test it also when you are doing analysis of a company. Cost advantage. Now you are one company which is already a market leader or a company which is producing thing in very, very large scale. When you will be doing it in the large scale, what will happen? Your cost of production will come low, and then you will have an advantage over other players. You can price your products lower and still make similar kind of profit or even better profit. That can be one of your strengths. Well, I have listed these points, taken it from different places on internet itself or from some of the book. You can also visualize and list down your 8th company strength. That should be completely fine. Okay, then what could be a company weakness? Bad financial. A company overridden with debt is a bad financial. Now this company, whatever they are earning, all they are doing is repaying the debt. That could be one of the weakness. Poor technology, old technology. So companies have enough money, but then they don't have the desire to explore new technology. They don't have a team or team of people who can explore and recommend the adoption of new technology, which will bring down the cost of manufacturing, which will bring efficiency in the system, which will give better client satisfaction. But then they are not looking into it and they are still working on old age technology could be one of the weakness. Okay. Internal politics within the organization. So something which I told you in the strength side, just against of that, non-efficient management and workforce not ready to give 100% of their capable effort, and rather being involved into the politicizing things or not being very loyal to the company could be one of the weakness. I mean it is very much vice versa. Okay, anyway, let's not comment on that part. It's quite a touchy part. Sometime this is the beauty of capitalism, that sometime you can be wrong, sometime your employer can be wrong. However, my philosophy has been always this: unless and until you are, I know I'm going out of the topic now, but I keep telling this to young entrepreneurs who are working in different organizations. As a teacher, I got a moral responsibility to share some of my experience as well with you people. So I always make this one line. This line is, unless and until you are not a very good employee, you will never be a good employer as well. If you are not a good employee, what will happen that you will always have a self-doubt that, okay, since I was also not a very good employee, might be the people whom I am hiring, they are also not giving their 100%. So you'll keep doubting your own people with whom you are working, you are going to work. So even people who are trying to or planning to become an entrepreneur in coming future and right now being an employee of any organization, all I want to tell you that give your 200%, become the best employee, and then only you'll become the best employer one day. Okay. Trust deficit from client, employees and other stakeholders. Yes, for example, let's say you have a vendor, but he don't trust you. He think that you will never make payment in time as a businessman. Then he will not give you the best of the product. He may delay the delivery, So the trust deficit can cause a lot of problem to a smooth operation of your company for a company. And obviously, if the company is not fluid, the operation is not fluid, it will finally impact the overall performance of the company. So any kind of trust deficit, if employees are not trusting their companies, clients don't trust the company, this could be in fact the worst weakness one company can have, according to me. Now, what could be an opportunity for a company? New geography expansion, I told you already. New product lines for the same customer, again I told you. Favorable change in business environment. So business environment become very friendly for you. You have been working for a very, very long time, but till now business environment was not in favor of you. But then certain rule, regulation which has been passed, the tax slabs has been changed, and suddenly your profitability will go up, and you should be ready for that. And if you are ready, if you were ready for these kind of favorable business scenarios, it can work as a great opportunity for you. Latest technology adoption, yes, opportunity. Merger and acquisition, so you have one competition or one person or a very small company who is probably coming up with a very innovative way of doing the business in your field, but you have enough cash on your balance sheet and you have an attitude also as a businessman that you may want to work with these kind of people, and at that point of time you may want to merge with them and you will still survive. You may want to acquire them and then grow much bigger. So these are again opportunity. One of the vendor who is a key vendor for you, and he's probably one guy who holds a very command of business in his own field, and you may want to acquire them as well. These are all opportunities, and you have to be very much prepared with these kind of opportunity, grabbing this opportunity. What could be a threat for the company? Competition. You can see idea was never prepared for launch of Geo probably, and you can see that what happened because of the competition. It was complete, idea was not doing bad. Customers were happy, everything was okay. They were doing good business, one of the fourth largest telecom provider, but then again wiped out completely. 200 rupees was the share price, and probably it's trading at 3-4 rupees right now. Got merged with Vodafone. Nobody know the fate and future of this company, and from where this threat came from the competition from a new player altogether. So entry of a new player could be one of the threat. Change in, I have not written down here, but you can note down that one of the threat could be entry of a new strong player. Second, change in rule and regulation. Again, the example could be you are into manufacturing business, you are emitting carbon, and government suddenly told that you cannot emit carbon up to above a certain level, and then at that point of time you may have to close few of your factories. Well, this is a big threat. Suddenly your production will go down. Unavoidable natural calamity. You understand it very well that any kind of natural calamity cannot be predicted, and it can come and it can wipe out your business. You have to be ready with, you have to be insured. You should have a plan where you are not concentrated in just one geographical location. Some of the risk management techniques you have to apply so that you can take the least possible damage. Popularity for new alternative products and changing preference of customers. So you are tea seller, suddenly customer want to only drink coffee. I'm just taking a hypothetical example. So here your own customer preferences got changed. These again two are very much overlapping points, I guess. Changing preference of customer or popularity for a new alternative product. So these are the threats which a company can face any point of time. There could be more threats. You can visualize, you should read more, and when you will be doing, let's talk about what next, in fact. So we will use these business tools to analyze businesses on quality side of fundamental analysis. Right. So these are the base of fundamental analysis, but only on the quality side. So now that this is the last class from module 2, where you learned about the building blocks of this stock market, what we are going to do is we are going to use whatever we learned in module 2 and 1, and again learn new concepts to start analyzing companies by doing fundamental analysis. And fundamental analysis will have two parts of it. One will be called qualitative analysis, where you will be using these business tools to position these companies and rate these companies, track these companies, test these companies, and then you will be working with numbers through their financial statements, which will be the part of the quantitative analysis. Right. So let's move next and start learning about fundamental analysis and analyzing companies. Learn the tricks of identifying the great companies to invest for very long term. Thank you.